Welcome to the last video you ever need on top-down analysis. Your ability to make effective and systematic top-down analysis is paramount to your success as a trader. Whether you're a scalper, a day trader, or a swing trader, if you can't make effective top-down analysis, you always face issues of where to start off your analysis, what time frame is relevant for analysis as a specific trader, when your actual entry model have occurred, and generally you're going to have a non-systematic approach to trading. And this non-systematic approach to trading is actually the recipe for unprofitability. You can't make money if you can't perform effective top-down analysis. And that's why I'm not just going to teach you guys top-down analysis, but I'm going to show you guys the most effective way to perform it, a way that is simple, rule-based, and systematic. We are going to discuss how to align your time frame, how to use this time frame alignment sequence to trade any time frame. And finally, I'm going to give you guys one of my best time frame alignment strategy. At the end of this video, you'll be able to pick a set of time frame that correspond to your trading style, analyze your chart using top-down analysis, and actually place a trade. So if that sounds interesting to you, go ahead and hit that like button and also subscribe to the channel if you're interested in content like this. And I'll see you guys inside. Top-down analysis is a process of analyzing a market by starting with the highest time frame to determine your overall bias, then working your way down to a smaller time frame to find specific entry point. Now, I want you guys to take note of this. There are three elements of a successful trade. One, directional bias. Two, point of interest. And three, your entry model. Now, these three elements occurs at three different time frames. Your directional bias, you are expected to look for it in your higher time frame, and your POY, you are expected to look for it in your intermediate time frame, and your lower time frame, you are expected to find your entry model there. So to perform effective top-down analysis, you must work with three time frames to frame these three elements, which are your directional bias, your point of interest, and your entry. This is how simple and systematic your trading should be. Now, what you're looking at here is actually a diagram that explains these three things. So in essence, what you are looking for is we are looking to determine our bias in the higher time frame. Then we look for a POY in our intermediate time frame. Then we look for our entry model in the lower time frame. And don't worry, I'll explain all these things. Now, how will you know which time frame that is going to be your higher time frame, your intermediate time frame, and lower time frame? And this is where time frame alignment comes in. Time frame alignment gives you a systematic approach of performing top-down analysis. This time frame alignment I'm about to show you guys is actually my personal approach and in my opinion the most effective time frame alignment sequence. Now I want you guys to take note of this time frame alignment now and the specific trading style that correspond to it. So if you choose to be a swing trader, you are looking for your directional bias on the monthly time frame. Then you go down to daily time frame to find your high probability POIs. Then you go to the 1 hour time frame for your entry model. Then if you choose to be a short-term trader, you'll be looking for your directional bias on the weekly. Then you will go down to your 4 hours time frame for your high probability POIs or key levels. Then you look for an entry on the 15 minutes time frame. Then for day traders, you work with daily 1 hour, 5 minutes, scalpers 1 hour, 4 hours, 15 minutes, and 1 minute, ultra scalper 1 hour, 15 minutes, and 15 seconds. So let me try to explain this in more details. Now, for personally, I'm more like an intra-week trader, right? My trade usually lasts 2 to 3 days, sometimes 4 5 days. So what I'm looking for is I'm looking for my directional bias on the monthly time frame. So I'm looking to find a trend on the monthly time frame. This will be the monthly time frame for me. Then on the daily time frame, then I'll go down to the daily time frame to mark out possible demand and supply zone areas, or it can be areas where price is likely to reverse from. I'm going to go to that intermediate time frame, which is daily time frame, to mark it. Down on my lower time frame, I'll start looking for my entry model. Now, don't worry, I'm going to teach you guys how to find these directional bias, how to frame a high probability entry model, and also a good and high probability POIs, and also a good entry model that you can actually go. So as I told you guys, before the end of this video, you're going to have a strategy you can start trading with. Let me give you guys a live chart example of the trade I actually took now. Now, this is an active limit order we want to take. This is a trade we are about to take, and it has been posted in my free Telegram channel. So This whole trade was based on the top down analysis I'm teaching you guys, and I'm going to explain it. So as I told you guys, the first thing you want to do is go to your higher time frame. This is actually a swing trade. So we are working with the monthly, daily, and 1 hour. So we went to the 1 hour, the monthly time frame to determine our what our directional bias. And to determine this directional bias, you just want to work with a couple of candles. You don't want to start looking back so much. It causes brings confusion. So as you can see, that price is actually trending, is clearly bullish. There are more green candles, massive green candles, and there are bearish candles. So we have already determined our bias that it is what? It is bullish. So what are we now expecting? We now want to go to our next time frame, which is our intermediate time frame, to look for possible reversal point and valid POIs that we are expecting price turning points in the market. So on the 1 hour time frame, notice what we have here. We have our normal market structure. Then we have this demand zone that was formed. So as price taps this one, this will serve as our POI. So as price tapped it, we are expecting some kind of reversal from this point for price to continue to the upside and take out this external range liquidity. So immediately price tap this place. I now went to my lower time frame and start finding my entry model. Now here on the 1 hour time frame, which is actually the time frame for my entry model, what am I looking for? I'm actually looking for, this is my entry model, right? This is actually my entry model. We want to see a liquidity sweep, then structural liquidity, and then we are going to place our limit order expecting price to take out that structural liquidity and expand higher. And this entry model can actually come in two ways. Okay, let's try to mark this out well. So we have liquidity sweep, then structural liquidity, actually break of structure, then structural liquidity. Then we want to see that it's actually tapped into that our higher time frame POI, which is this. So we can decide to take our the other block or demand or supply zone that was formed as our entry, or sometimes I usually take the QMR, which is the other block that failed. Right, so anyone that you want to do, and this can actually come in two ways. Right, this can actually come like this. This can actually come. We can actually have, sorry, we can actually have the structural liquidity before the break of structure. The most important thing is that we have structural liquidity that's going to get taken out and expand higher. So this is actually our entry model, right? So now if you look at this entry that we are taking now, you can see that it corresponds to this second distance. What do we have here? We have a liquidity sweep, we have price sweeping out liquidity from this place. It forms a, it puts a low, then sweeps out that liquidity, then creates some form of structural liquidity all this place, and finally break structure at this point. And we have a lot of price action. So since we have our criteria as I've met, which is liquidity sweep, then structural, then break of structure, and we have a structural liquidity, we can actually take this entry and expect this thing. So I usually like to take trade out. So you can see the strategy, simple. Why are we looking for liquidity sweep, break of structure, structural liquidity entry, liquidity sweep, break of structure, structural liquidity entry. So, and where are you going to be looking for this entry model? In your lower time frame. So now this next example is actually on USD JPY, and this is actually a swing trade, right? It was taken on the 1 hour time frame. So the first thing we want to do before we take this trade, we want to go to the our higher time frame, which is our monthly time frame, to determine the directional bias, to know whether we are in line with the directional bias. Now you don't need to work, once again, you don't need to work with mini time frame, just mini candles. Just want to look at back at few candles, maybe 50 candles or something like that, to try to spot the trend. And you can see that the trend is clearly bullish. Now it makes sense to be buying rather than selling. So now you have determined your directional bias. Next thing you want to do is to go to your next time frame, which is your intermediate time frame, to determine your to look for your point of interest. Now on this intermediate time frame, I actually marked out this other block here. So what do we have here? We have our normal market structure. So we have this point of interest that price can react from. So as price tapped this place, as price tapped this entry, I'm expecting my entry model so I can take the trade up to this high, right? So now I went to the 1 hour time frame to look for my entry model. And remember, what is my entry model? So what is my entry model? We are looking for liquidity sweep, then break of structure, structural liquidity, enter. That's the three rules of it. So what do we have here? Immediate price tapped into this our key level, right? So immediate price tapped into this key level we marked out. We now start looking for our entry model. So what was our entry model? We have our liquidity sweep, then structural liquidity, then a break of structure. Yes, wait, a market structure shift in this case because of its reversing. Then we place our limit order and we took this trade. Let's try to sum this up. What are you looking for? The first thing you want to do is to try to determine your trading style. Do you want to be a scalper? Do you want to be a day trader? Do you want to be a swing trader? So whatever, or not ultra scalper, whatever type of trader you want, when you determine it, I use that time frame alignment I gave you guys. You can go back to this video and screenshot it. So use it to pick the time frame that correspond to this trading style. So this is your trading style. If you choose to be a swing trader like me, I'm working with the monthly, daily, and 1 hour time frame. So if you choose to be that, if you want to be a daily time, if you want to be a swing trader, you can actually work with that three time frame. Then you go to your monthly time frame to determine your bias, your directional bias. I don't need to overcomplicate it. You just want to look down. If this was the higher time frame, you just want to look down and see. You can see it's actually bearish. It's actually trending down. So that's how you determine your directional bias. Then you go to the next time frame, which is your 1 hour time frame, your daily time frame, to start looking for POI is your point of interest that you believe that price can react off from. So finally, you want to go down to your weekly, to your 1 hour time frame to look for an entry model. Now you can decide to have different entry model. It can be ICT, um, um, box model. It can be a 2022 mentorship. It can whatever entry model you choose to use. You can decide to do it. Just follow the sequence. But this is the one I actually use, and you can trade it. One of the issues you are still going to face while performing this top-down analysis is that most time you wait for your price to hit your key level. This is your higher time frame key level, this is your POI, but price never gets there. It just keeps on flying. And that's why I came up with an approach that fixes this. I call this down to top analysis. So let me try to explain this. So what you are doing, you are starting with your lower time frame, your lower time frame to find your entry model. Then once you find out your entry model, then you now go to your intermediate time frame to see whether that entry model is occurring in your point of interest. Then if it's actually occurring in a point of your in a valid point of interest or valid key level, then you now go to your higher time frame to see if it's in line with the trend, if the directional bias, if the trade is in line with the directional bias. Then once it's in line with the directional bias, you now then the trade is valid and you can actually take it. So if you want to learn more on this, you can actually click the video on your screen right now. And that's it for the video. I hope you guys like it. Smash the like button and also subscribe to the channel as always. If you want to join the challenge, which is we are accumulating 1 million in profit capital, you can actually send me a DM to join our private group. We're actually doing this challenge. We started the challenge on August and we have been able to pass the first three profit. We started with 5k profit. We have to buy the next 5k profit, and because some people were always catching up. So we have passed the first 5k, passed the second 5k, and we are trading the phase two of the second of the first 25k. If we pass it and make withdrawals, we use it to buy 100k. I think it's going to reach for 100k, and that's how we scale up to $1 million profit capital. So if that's something you're interested in, send me a DM to join the private group. It's actually paid. Right, so thank you guys for watching. As always, smash the like button, and I hope to see you guys in my next video.